Welcome traders from all over. We are back once again. We told you guys we weren't going to miss another week. Technical Tuesdays is back and today's volume 36.
Okay, so as promised to many people via email messages from all over social media, we are going to today be covering brokers. Now why? Basically because we're forever getting messages on what broker we use. We've used many in the past, and also we've seen people, especially on the Facebook, actually sharing posts about brokers, whereas brokers are now not paying out, brokers are going under, and people are losing money.
That's right. So in this video, instead of just giving you guys some suggested brokers, we thought we understand that people that live in different places, have different trading accounts, need some different advice. So we're going to go over 5 major reasons what you need to consider before selecting your broker. Enjoy.
So number 1, and that number 1 is regulation, brokers regulations. Now many traders out there, especially newbies, often glance past whether a certain broker has regulations. We may get sucked into, we definitely did in the past, the tricks of the fancy broker names, fancy websites, and all of the other fancy marketing techniques in which the brokers ploy out to everybody out there.
That's right, and one of the reasons why not trusting an unregulated broker can work against you is because if you're in certain trading scenarios, like you're in a trade where you weren't meant to be, you're trading at closed when you put your stop loss there, and all types of different things. You basically can't take a legal action against a broker that's not regulated. So again, we've been there, I'm sure you guys have as well. It's not hit your stop loss yet, and you want to send them an email saying what the hell's going on, you're basically not covered.
Another big pointer with unregulated brokers is the scam of a bonus scheme. Now, we definitely fell into this trap back in the day, and I'm just going to give you an example. We had a student who came to us who had already lost about 15-20k in the market. Okay, so we helped him, gather his thoughts and his path. So this student, I'm not going to mention any names, but this may relate to other people out there and viewers. He put 10k in an account, and the broker offered him an extra 50% bonus. You might see this on brokers' websites, Facebook ads on some of the biggest FOREX websites in the world, which are just total nonsense. So 10k credited with 15. Now it's just like any gambling website that you might see out there. This, if you read the terms and conditions of the bonuses, guys, for one, you're going to have to make about 400 million in order to actually withdraw that 50% bonus, and also the most important part is that they can take the bonus away from you at any time. What does that mean? It means that if you have extra capital, you're now trading bigger lot sizes, psychological aspects and so on. And let's say you had the 15k there, you lost 9, they can just take that 5 away and then you're left with 1. That's what happened to one of our students, but we put him on the right path and told him, don't fall for that mistake ever again. That's
right, yeah, like Sean said, it plays a huge part in your mind because you're almost giving free money. And I'm sure like anyone out there watching this video, and including us, if someone gives you a huge chunk in your account, that part you're like, I don't really mind taking a few risks with. That doesn't go too well, and they actually just, again, take their big chunk out, so don't do that. And the second thing is, the last thing is, unregulated brokers can go into bankruptcy. And when that happens, guys, I promise you are not getting your money back. There has been quite a lot of stories, I can talk about them all day, but yeah, if an unregulated broker goes into bankruptcy, you're screwed and your deposit's gone.
Yeah, another big one, okay. Now that was unregulated broker pointers. Now even if you do find a regulated broker, just be aware of, first of all, well, we have many countries around the world who are going into default, even financial institutions, and also if you do find that broker, just ensure that country in which the broker is situated is in actual, they have good legal protection overall.
That's right. So for example, you've got the United Kingdom, you've got the United States. Now these are countries that have high legal, like Sean said, laws, and in those laws people and businesses comply with the laws. So in any case of anything going wrong, you're legally backed up and your money is actually protected.
So UK, US, as I mentioned, pretty cool for now. However, less industrialized countries who don't have the best legal protection, can actually be dangerous. For instance, many countries breaking out in civil wars. There was actually an article which we read a few days ago about a broker who set up in the midst of a country's civil war, and you can guess what happened there. These guys can just chip off with your money. There's all kinds of different ways they can go around it. We could easily set up a broker, and we've heard of stories of people just getting virtual offices, regulating a company, people, you know, paying into some bank, and then they chip off, and then you can just take your money, never hear from them again.
That's right. The best advice we can give on choosing a broker that's regulated, that's in the right location, is the location that your broker's based. Would you guys visit there? And if you wouldn't, then consider, do you really guys want to put your money there? Don't be reckless with your money. Ensure that the laws, the regulations, everything is intact. Second big topic which we're going to discuss with you guys about brokers is basically choosing the big players and the big brokers over the small ones.
So this topic is in fact regarding the actual broker's startup capital. Now, going back in history, not even too long ago, because the forex market is quite newly established, from 20-30 years, well, brokers, some countries allowed the brokers to actually start a whole broker firm with just $100,000. Now
that was in the United States as well.
So
imagine what other countries were like.
So basically, do a little bit of algebra if you wish. If 1,000 traders all win just one trade, the broker is screwed and they can't really pay out.
That's right. So the warning here is, guys, you might get approached by because again, all your information once you join one broker is usually passed to all the others. All this information is usually sold. That's why you probably get annoying emails, phone calls, text messages. Join this broker, join that broker, and again, people can give you certain things which you might think there's an advantage of choosing this not very known broker, but again, you do not want to fall in any of these traps. Choose a broker which everyone knows about.
Yeah, so as the regulations tighten on brokers and FX in general, the good news is for everybody out there is that you now need around 20 to 30 million in the USA?
Yeah,
in the USA, again, $20-30 million in order to actually open the broker firm. So you've got that little bit of leeway and comfort for your clients too.
That's right. Now, from what I believe, brokers from all around Europe and other places as well, they're all following to these standards, and the regulations are getting tighter. So yeah, again, brokers will not be able to open up with just a few $100,000.
So as a side note, again, just do your research on a well-established broker, see how long they've been actually established for, when they were licensed, and so on. You can even go on, is it the website now?
Yeah, I think it's CFTC.
CFTC, and on their website there's it's like Go Compare for brokers. So CFTC, if you Google that, it's a great website which we've came across in the past, in which you guys can go and scout out which brokers are doing what, basically. That's so right. Hope that was helpful.
Yeah, they update every month, so enjoy. So now we're going to go over one of the most crucial things that you guys need to consider when choosing which broker to go with, and that is commissions and spreads. We do know there is loads of different things written online about commissions and spreads, but we know it's not the very most easy to understand. So in this video, we've got scenarios, got explanations for you, and examples. So hopefully you guys learn a thing or two.
Yeah, so we're going to give you a breakdown, 50-50 breakdown of the two major types of brokers, even if they are regulated. Now, in this, I'm going to play the broker with a dealing desk, which is also known as the market maker.
And I'm going to be playing the non-dealing desk, also sometimes referred to as the true broker.
Yeah, now, me, okay, so as a dealing desk broker, I am going to be making the majority of my money, commissions, spreads, etc. from you guys entering just on an entry fee. For instance, if I was, let's say, GBP JPY as an example, if I was getting GBP JPY at 2 pips commission, I can be feeding it through you guys on my platform at 4 pips. Maths, I'm making 100% markup on that actual trade. Now, I am also quite sneaky in a market maker, as I may deal with a little bit of a manipulative factor in the market. let's take for instance the spread. I can widen the spread. I can make the bid and the ask quote a little bit wider, especially when fundamental news comes out. Now, we're actually forever telling our students not to trade around the fundamentals. Let's take non-farm payroll as an example. May have happened to you guys where you're trading a major news event, and what often happens is you could get spiked out, and you can check your chart, but you know where the spike is on the candle didn't actually come down to the actual price of the stop loss. The reason being is because I make the spread, the difference between the bid and the ask, invisible, and I like to capitalize due to these major fundamental events. However, as a market maker broker, things are getting tighter on me because of the regulations and so on. You guys out there may know, you know, all of the banks, etc., dealing with all the manipulative factors. Regulations are now tightening up, and it's getting harder for me to actually take advantage of my own clients.
That's right. So my non-dealing desk will show you how exactly we make money. So where Sean makes money again on your spread, I might come along. Let's use the same example, GBP JPY. Sean has just given you guys a 4 pip spread. I might come along and seem a lot better, a lot nicer, and say, right, I'm going to give you a 1.4, maybe a 1.5 spread. And you guys might be very excited right now. However, I am going to be making my money on every time you get in and out of the trade. Now, for example, let's say £2.50 for everyone that lives in the UK. So I'm going to charge you on the spread, which again could be quite small. However, I'll come in right after that and charge you £2.50 for when you get in and £2.50 for when you get out. So that's how I make my money. And if I had to compare it to Sean's, with Sean's again, people might be using higher volume sizes. So Sean is making a nice chunk on your spread, and I might not really care about how long your trading account is around. Whereas me, I am making more money on the more trades you place. So the longer you guys are trading, I'm making money every time you're in and you're out.
Yeah, so let's go a little bit further. We're now going to go through 2 examples. Start with, let's say, trading my favourite pair, the Aussie dollar. Now, you may have seen a nice bearish setup on the Aussie dollar. Now, this first example is applicable to those guys who may be trading a few thousand and trading a volume of around £1, £2 a pip. Now, first of all, if you guys want to transact with me through the dealing desk, remember, I am going to, for an example purposes, I'm going to charge you 5 pips to enter the trade. Now, your cost is obviously £5 because it's £1 times by the pip, the spread amount, which is 5. Okay, so this may appeal to guys who are actually trading, you know, the low volumes and so on with a few thousand. Now, this actually means when you execute the trade, you're going to automatically be down £5. So you would have to technically be 5.1 pips in the positive for you to see some profit.
For you to even be happy, in other words. So now I'm going to show you the exact same scenario. Again, let's use Sean's Australian dollar example, and again, exact same pound per pip, which was £1 per pip. So let's bring this a lot closer. So £1 a pip. Again, I told you guys I'm going to sound a lot more attractive, and I'm going to come in at a 1.4 spread compared to Sean's 5. But I did tell you about my 2 cheeky costs, which I'm going to charge you. Now let's say it's £2.50 for when you get in, £2.50 for when you get out. So let's add this up, shall we? It could potentially be £1.40 for the spread, £2.50 to get in, £2.50 to get out. So if we were to add this up, we are now getting this trade, and it's costing us £6.40 to even be in the trade. So if Sean holds up his example,
I'm the winner.
Sean charges £5 and I charge £6.40. Now, however, before we get carried away, let's show you an example. If it was more volume size, and let's say if it was £10 a pip, what would happen?
Before we conclude, okay, so you guys, 10k, 15k, 20k traders, want to place one lot now with me again, that same spread, £5 a pip. I'm going to charge you guys to be in the trade and transact.
£10 a pip.
Oh, £10 a pip with a 5 pip spread, sorry, to be in the trade and transact with me. So overall the cost is £50 to be in the trade. So going back to, you're going to automatically be £50 down, and you'll have to again see 5.1 pips to be in profit and to be happy.
Not a nice feeling entering a trade knowing you're already down £50. Now again, let's show you my alternative scenario which you guys can choose. Again, exact same thing, £10 per pip, just like Sean. Now, again, I might come in at a nice 1.4 spread. And again, just like the last scenario, £2.50 to get in, £2.50 to get out. Now let's do the maths on this one. £14 is going to be your spread cost with me, and I might charge you £5 overall to get in and out the trade. So where Sean is charging £50, I'm going to come in at a sweet £19 approximately to get in and out the trade. So as you can see, there's different kind of advantages on trading a smaller amount of money. You might possibly go with Sean, and if you're doing the bigger volume sizes, you might be going with your dealing desk.
Small accounts, so let's just give them a figure of what we say by small, maybe 10.
Yeah, you could be
anything under, say, 5k.
Yeah, £5,000.
Anything 5k or under, go with me, the market maker.
However, if you're a little bit more confident and you might be trading your tens of thousands of pounds, you might have more advantage trading with me.
Yeah.
So I hope that guys, hope that guys made sense and it was very easily explained. So now we're going to discuss our fourth thing which you guys should look for when choosing your broker. Now this one is just the diversity of a broker, which we break it down into how many different account types do they offer to all of their clients.
Now everybody out there, every trader has different financial needs and so on, so the broker should accommodate for these needs. Many brokers, well not many, but many brokers that we've used have actually accommodated for these needs by offering different account types. Now those account types may include, you got obviously your demo account, you have a micro account, a classic account, and maybe even a pro account.
There are some more accounts again which they might throw in there, but these are the basics that you should look for. And now I'm going to quickly again just go run over about which account size is for who. So I've got demo. I'm sure many of you that are watching this video will probably have already traded demo, if not trading demo now. A lot of advantages if you guys have just finished on education, or you guys are having a bit of a fiddle round. Don't go into a live account, guys. Trade demo, and again help you improve your consistency and your strategies.
Yeah, upon trading demo and practicing your consistency strategies, etc., you want to take up to that next level, you may now be interested in the micro account. What is the micro account? The micro account is suitable for those who may be using volume sizes less than £10 a pip?
£1.
Less than £1 a pip. So let's say 10 cents, 10 pence, 5 pence, etc., which normally equates, I think it's been a long while, but 0.01 in brokers' terms of contract sizes and so on. The downside to a micro account is that they may actually charge a higher spread. However, it's great to learn on.
I was going to say, me and Sean, I think we had our fair share of bedroom accounts that were all micro. Like that's all I used to go for, and again, it definitely does help you build your confidence. So again, as you're talking about a trader giving you guys advice from a demo, once you build that consistency, go to your micro account and practice. Don't be ashamed to be using 20p a pip, 30p a pip. Me and Sean, we were exact same as you guys, and again, it just helps you build it.
And even with the micro account, may be suitable for those with account sizes of £500, 1,000, maybe even up to like 4 or 5k. It depends on your risk if you want to do like 1% and so on. So that will accommodate for you guys. The
next type of account we're going to look for is your classic. Now this is probably again one of the most popular account sizes you guys can have, and again it comes with a now it comes with a minimum. So whereas micro you could do 20p a pip, 30p a pip, with classic you have to do minimum £1 a pip.
Yeah, so classic, I'm sure we've again had our fair share of classic accounts in the past, whereas now we thought we're stepping up the level. I'm better than the micro now and so on. So minimum is £1 a pip. Again, all of these broker accounts offer different leverage as well. And classic is more so for those, I would say 5k plus up to around 10k who are just getting started and want to make that consistent but small, safe risk.
Your spreads will be a lot better than micro as well. So if you guys are onto the point where you might be trading for a living, again classic is the next step up.
Yeah.
And the last one
before that we nearly forgot one. Before we go into this one, we're going to pro. just come to mind now, spread betting accounts.
Oh yeah,
many people often ask about spread betting accounts, and we get a lot of people asking about the tax regulations and so on. To be honest, there's all kinds of rumours online and so on, but with the spread betting account, I know some good brokers offer a spread betting account, and you also have the CFD account as well, which is more suited for those people who are trading FTSE, DAX, etc. But we're talking about Forex right now, so we're going to focus on that. But yeah, with spread betting accounts, the regulations surrounding spread betting slips in with I know in the UK it's under the UK gambling law as well. However, I am aware of, even say for instance you're not employed on paper by the HMRC, even if you are trading spread betting account, you are still liable for tax and so on. But however, I think if maybe even if you're a business owner or employed on paper, you can use a spread betting account and you won't be, you won't be hounded for any tax unless you're raking in 20-30k a week. So I think
Astrofx consultants. Astrofx consultants. So yeah, again, the last one I'm going to go through is a pro account. Now this is something again which me and Sean use on a regular basis. Good thing about pro account is your spread will be very, very small. These guys, all the brokers obviously want to try and rake in the high net worth clients. So again, low spreads, faster execution, and again they're going to treat you a lot better. But again, definitely build your way up. And with a pro account, you're going to have to do minimum £10 a pip. So be ready to have some big wins and big losses. And
just to chuck this one in there, with a pro account, I know we used to use our Pari, they were minimum £25,000 deposit to be entitled to the pro account benefits, but you do get priority with withdrawals and stuff like that. So it's another major point to just throw in there about the withdrawals and so on, which we're going to get to soon. But yeah, the overall, we got the demo, micro, classic, spread betting, CFD, and then the pro account as well.
I hope you guys found that useful. So one of the last things we're going to discuss through right now, after discussing again regulation, spreads, and so much more that we've discussed in this video, one of the last things you guys should look out for is customer service of a broker.
Customer service in all walks of business is in fact an important factor now. Just remember that each and every broker out there are there because they need you, not the other way around. These guys are the middleman to the market, and they're making money and staying afloat from the customer.
That's right. And other things that you can look out for, just again, it's just usual business. If you go on a broker's website and their contact or phone number is not easily visible, big red flag. Something's not right here. You wouldn't buy car insurance off someone that you couldn't speak to on the phone or get on the phone. Again, with phone numbers, you might also want to look at emails. You've got live chats. You've got quite a few things, right?
Yeah. So in terms of emails, any broker that I've ever signed up for in the past, and I've used many in the UK, many in Europe too, I'm always popping up on that live chat and asking them, before I deposit my funds, how long do you take to withdraw? Now they'll say a day, 24 hours, maybe even a few hours. However, it can sometimes be a different story when it comes down to it. However, when you are actually signing up for that account, you will get many numerous phone calls. I'm James, your account manager, do you want to deposit? How much will you deposit? It's like, even when we've done certain interviews with people and stuff, and after we've had Skype calls, and all they're interested is forward your clients on to us, and we will give you 1-2 pips. Like, we don't push brokers on nobody. So just remember, guys, if they a little bit long on the emails, but beforehand, always just use that live chat to have a chat with them live on the website before you put your money in the account.
Make sure all of those things are also 24 hours. I remember many years ago there was a complaint about this broker that suddenly would stop all contact at 5 p.m. People would get home at 5 p.m, they want to check on their trades, they might not be happy about something, and suddenly it's all shut. So again, if a broker has more than 10 people working for them, I'm sorry, but their services should be 24 hours.
Indeed. That will also lead us on to probably one of the most important factors for us too, that is withdrawals. Like, everybody's depositing money as an investment on each individual trade, and we want to get that money out as soon as possible. Other people may have trading styles where they want to compound their money over time. However, our personal style is to withdraw chunks out of the market and actually live from our trading accounts. So withdrawal times are important. So first of all, I know at the moment, seen some posts on Facebook, some friends out in India who have used overseas brokers. for God knows how long, and then all of a sudden they are now refusing to give withdrawals. Why do brokers refuse to give withdrawals? Is because behind the scenes they ain't doing too well, so obviously they can't actually pay out to the clients, and they may lock your money for certain reasons, only give you partial withdrawals, or even try and prolong the withdrawal over a week or so. It just gets quite irritating.
As I say, definitely when it comes to prolonging that, reminds me of the time a few years ago. I think I'd put around about £20,000 in a trading account, and again, one thing I didn't ask was the withdrawal times. I think I'd made about £2,000-3,000 over the space of about a week or two, and suddenly it's come time to withdraw, and it's telling me 6 to 7 working days. And I was like, are you a trader? Do you know how hard it is to sit on your hands for 6 or 7 days? And they goes, we can't do anything else. I think I was calling up Sean, asking him to kind of, let's do something, let's keep ourselves busy. 1 or 2 days had passed. I kicked in, I gave in, I placed a few trades, didn't go too well, and I lost all of my withdrawal. And I can imagine the brokers there just laughing about me not being patient enough. So yeah, withdrawals needs to be quick.
Yeah, so with that, it's one where I'm quite an impatient person, so my broker currently, if I want to withdraw, I can log in online upon closing the trade, and they will send it back to my card within the next hour. So it's a big important factor that we pride ourselves on when we choose a broker. How long are the withdrawals going to take?
That's right. And last but not least, again, we know everything that you read online is not true. Hell, most of things are not true online. However, when it comes to choosing your broker, maybe look at some reviews. Usually people that will leave good feedback will also maybe mention some things that the broker could have improved. So again, look at reviews, see what other previous clients have had, good experiences and bad experiences, and I think that's it.
Yeah, and on top of that, just see if you can make a sustainable relationship with your account manager. You guys who have set up brokers, you're always going to get that phone call. Can you deposit how much and so on. Some of them are like sharks at times, but just try and keep them sweet so they hook you up, basically.
That's right. So guys, I hope you enjoyed Astrofx, talking about the 5 essential things you guys need to consider before choosing your broker. And now, I believe we don't have much time left, unfortunately, because we wanted to talk about such an important topic, but we are going to have enough time just to squeeze in a few charts on the technical side.
We're going to do 3 currency pairs, 3 main ones, quick and simple, because I want to go home.
Let's go.
Now, let's crack on with some technical analysis. It's getting quite late here. I hope you guys enjoyed the first part of the video where we're talking about the brokers and so on. Now, I'm going to cover 3 currency pairs. We're going to start with Euro USD, then I'm going to go on to GBP USD, then I'm going to go on to Aussie dollar. Now, first of all, as you can see right here, Euro USD. Last week, let me just show you a screen munch of the actual video, last Technical Tuesdays, whereas I was going over the Euro USD and the 2 different scenarios in which may occur. Now, first of all, here we were trading at 1.0940 on this daily support. I did, in fact, break down, okay, if we've seen a break of this support and close below on the daily, we could, in fact, expect 1.0500 to be retested. However, we did, in fact, again, the other scenario that I broke down was if the Euro USD puts its head back above weekly resistance, we could be in for bullish momentum up to 1.1500, then 1.1700. Let's go over. This is what happened. As you can see, popped its head all the way back up. If I just zoom in a little bit for you guys to see clearly over here, we can see the MAs are about to cross over as well. Weekly is already up, waiting for them daily ones to follow suit. Sat on our hands. However, I did find an inside bar formation here, 1, 2, which I did take advantage of. And now I'm actually just under 200 pips in profit on the Euro USD. I'm back in trade in full swing, full effect. But yeah, I'm a nice chunk up on my account at the moment. I'm just under 6,000 up on Euro USD. I've already covered my stop past break even. Now I'm anticipating a bullish run higher. I'm not bearish on this currency pair. Last week I gave the 50-50 and explained that people need to chill out on the charts and so on. We just trade what we see, basically. Broke support, short bias, broke resistance, long bias. So yeah, Euro USD at the moment, you can see my annotations here. Price action is back above the weekly key level, which I'm still yet to just modify to weekly support 1.1. 1.500 is target 1, and target 2 is still the same fib target, in which this here 1.1722. so this here, this double bottom, was in fact a 61.8 Fibonacci retracement level. Now on Euro USD, what also backs up my long bias, which I've also mentioned for quite a while, is the bullish engulfing on the monthly time frame just here, which pulled straight up with a tweezer bottom formation of 1.0500. so now we are in fact looking at a long bias on euro, currently in buy mode according to my analysis. If you wanted to wait that extra, be a little more conservative, these moving averages, probably tomorrow's close. However, we do have some major news tomorrow at 6. Technically we're bullish, all things can change, however sometimes the fundamental can give us the boost in alignment with our technical trend anyway, if you know how to read the price. So euro, a lot of controversy around this one. I haven't made much money on euro for a good maybe 2 months now. However, I'm still actively involved and I'm watching the price, monitoring the price, because I know when we do break out or reverse, euro will go at speeds of 300-400 pips. However, I've got a more attractive setup here. Now, I posted this on my TradingView account today. Last week I highlight high highs, high lows, high highs, high lows, etc. We currently also are at our third point of our trend line here, 1, 2 and 3. We have, if I just remove the candles, actually crossed over on the moving averages. If today's close, Tuesday's close, tonight's close, is in fact strong, and as it is now basically, I'm saying if we close above 1.5600, this is good to buy. This is good to buy. 1.5700 target 1, which is nice 100 pips away. Me personally, I wouldn't take that. I would lock my stop loss in maybe plus 50 or so, just because of the risk in the market due to tomorrow's news event. However, I will be holding this and running this up to 1.6, if not the fib here as well, 1.6150. So GBP USD bullish, Euro USD bullish. News can change all that. I'm just going off technicals and giving you guys my insight, especially as we created this doji here. And we rebounded off monthly support 1.5500. So that's it for sterling. And Aussie dollar, let me just break this one down. I think I went through this last week. I can't remember, I'll go through too many charts, but currently just riding on the weekly support 0.7280, 0.7300. Many people want to go on about trend trading and trying to belittle the scene of day trading. However, sometimes we've been waiting 5 months for Aussie to break out. I'm not saying go in and trade the range. We don't trade the range. We will highlight 5 to 7 currency pairs and trade the ones in which are trending, where the momentum is. Now, there's nothing wrong with, in certain market conditions, taking intraday profits. That's great. But here right now, Aussie, we broke out a shooting star. I think I went through this last week of the support 0.7550, which is now resistance. And we've came down around 200 pips to target 1. This, however, let's go down to a smaller time frame. This could pull back maybe to this as a retest before going low. I'm not too sure. I'm going to be monitoring this one. However, as you can see here on the 4-hour chart, we have lower highs, lower highs, lower highs, lower highs. If this is a lower high and we get maybe a 4-hour / daily close back below here, we can in fact go short with a target of 0.7. That's what I'm going to go through today. Feel free to go back on our last video where I may go in further detail on these currency pairs, but euro long, pound long, Aussie short, if we break the Aussie weekly support there. So to wrap it up, guys, it's 9:30 at night for us over here. And yeah, I hope you guys found the broker information useful, the technical analysis useful. Please leave a comment and we will be happy to hear your feedback. So we'll see you again next week.